Good afternoon. Welcome to the Banking and Consumer Affairs Subcommittee on this snowy Wednesday day here. I'm glad that everybody in the audience here, and maybe got a few people watching from home. I know my first grader is probably out. Well, she is out of school, and she said that she was going to tune in. So a happy Wednesday to Sloan. Mr. Clerk, please take the roll. I will say that Michael Hale called me this morning, and he is unable to attend today.
Mr. Chairman, you have 5 members present. You have a quorum.
Thank you, Mr. Clerk. Any personal orders by our committee? Representative Hemmer?
Thank you, Mr. Chair. I have a couple of constituents that are on a snow day, it looks like. Can the 2 Bivens children stand up, please, and be recognized? As Mark Twain said, never let a little school and get in the way of your education.
That's right. That's right. Welcome the Bivenses. Yes, ma'am.
Thank you, Mr. Chairman. I'd like to please welcome my husband. He drove me here today, so embarrassed that I am introducing him, but he doesn't come down here often, so I thought I'd introduce him.
Good to have you. No more personal introductions here. We'll jump right in. We got a full agenda for the banking committee today with 4. We'll jump right into House Bill 0110 by Chairman Bricken. We got a motion second. Second.
Thank you, Chairman and Committee. This bill is an administration bill brought to us by our friends over at the Department of Financial Institutions. It kind of just clears up something that in statutes that really authorizes the Commissioner of Department of Financial Institutions to determine the type, amounts, and other characteristics of deposit insurance for each state bank. And that's really just puts in statute that gives our commissioner the authority to, I'm going to say, regulate deposit insurance for our state banks.
Thank you, Mr. Chairman. Any discussion on the bill? Representative Hemmer.
Thank you, Mr. Chair. And thank you, Representative, and a chance to talk to the commissioner and other stuff. One thing I did have a question after thinking about it and looking at it is one of the things that says any other factors the commissioner may be relevant. Seems pretty broad, but do you have any examples of what those may be?
I have none. I just know the good judgment of our commissioner will prevail on any of those factors.
Follow up.
Would we, the chair indulge the commissioner to maybe weigh in on that if he's on the list?
Yeah, of course. Commissioner Gonzalez, sir, if you would state your name and yes, and state your name, but we'll gavel out of session.
Greg Gonzalez, Financial Institutions. So good question. You know, that's kind of catch-all. Any other factors that the commissioner of the department may consider. That's some basic language that's in a number of statutes. And just in case there's other things that we might not contemplate, but you know, the things that are there are the critical elements: safety and soundness, public confidence, being able to work with the industry. Those are the things that we'll definitely want to look at. And I'll just also say that not just me, but a number of commissioners before me have required deposit insurance, federal deposit insurance for decades. We don't have express authority to do that. We have implied, but it's not express. Because of discussions that may be going on in Washington, I think it would be good to have that clarified in the law with those standards laid out.
Representative Chairman or Representative Hemmer, any more follow-ups?
Yes, sir. Thank you.
Thank you, Commissioner. We'll go back into session. If there's does anybody else have any questions for the commissioner? We're back in session. Any more questions for the chairman? We're ready to vote. Mr. Clerk, will you open up the votes?
Mr. Chairman, you have 5 ayes.
Thank you, Mr. Clerk. Chairman, the ayes have it. House Bill 0110 will go on to full commerce. Thank you. Next up, we'll hear from House Bill 0908 by Leader Garrett. Second. Leader, it's all yours.
Thank you, Mr. Chairman. I missed the committee. I was here last session and glad to be back presenting this piece of legislation. What this legislation does is currently, if you receive a HELOC loan, you are subject, 15-year has an interest rate that the current index is. If you want to have a HELOC loan and extend that to 20 years, you've got to use the 30-year Treasury yield. We're one of the only states that does that. There's no market for that here if you want to get a HELOC loan beyond 15 years. So this bill simply allows us to use the current index rate for any HELOC type loan that's over 15 years. So with that, Mr. Chairman, I'm going to take any questions, but that's all the bill does.
Thank you, Mr. Leader. Any questions for the leader? I think we're ready to vote. Mr. Clerk, will you take the vote?
Mr. Chairman, you have 5 ayes.
Thank you, Mr. Clerk. The ayes have it. House Bill 0908 will go on to full commerce.
Thank you, Mr. Chairman and committee.
Next up, we'll hear from the leader again on House Bill 0817. We got a motion second. And I think you've got an amendment with this.
I do, Mr.
Yes, sir.
Chairman.
What's your tracking code?
That amendment rewrites the bill and it ends in 3684.
All in favor of adding the amendment, say aye. Leader, you're properly before us.
Thank you, Mr. Chairman. This is my 7th year to bring what I would call the trust legislation that I have brought every year that I have been here. And Tennessee has always maintained, I'm not sure if it was before this trust legislation that I brought the past 7 years, but we're one of the top 3 states that has trust assets here. And it's reasons like this committee and our General Assembly why it makes it attractive. So this really is sort of cleanup bill. We're using some more definitions. There's 4 or 5 things, and I will say this is the shortest legislation I've brought in the trust world since the 7 years that I've been here. But we're just redefining some things like when a public trustee can be appointed. We're clarifying now everything is so electronic. What type of notices can be provided in the electronic system if you create an account with folks that hold trust assets. And we also have some provisions where there may be a settler of a trust, the person who creates the trust. There could be some reimbursements back to that settler that's completely appropriate under the trust. And then also the actual person that created the trust. There's also some reimbursements for tax purposes that we're clarifying in some of the code. And then finally, the last thing that we're updating is who can serve as a non-beneficiary in a non-fiduciary role as an investment advisor. I'll be glad to go in further of any of those details, but that's basically the gist, Mr. Chairman, of what this piece of legislation does.
Thank you. Yes, Representative Lynn.
Thank you, Mr. Chairman. Can you guess who carried the trust legislation before you?
Yes, sir.
I would imagine that could be you. I don't know.
It was me. Governor Haslam had legislation that really opened up Tennessee for trust. So I carried that for him. But thank you for taking over the role. It's wonderful. Thank you.
And if I can comment there, from what I know, and it's very little, but I do know that Tennessee is one of the most attractive states in the country for trust. So I appreciate y'all's crystal ball in bringing this bill.
And Mr. Chairman, with that, to say, we've gone from 25 billion under trust management to 300 billion. And you can imagine, while we love for people to be here, but we also would like their money to be here, even if they're here or not.
Yes,
so
sir.
That designs this legislation, but why people see Tennessee as an attractive place to park their money for whatever trust purposes they may have. So,
Yes, sir. Any discussion? All right, we're ready to vote. Mr. Clerk, will you open up the votes?
Mr. Chairman, you have 5 ayes.
Thank you, Mr. Clerk. The ayes have it. House Bill 0817 will go to full commerce.
thank you, Mr. Chairman and committee.
Next up, the committee will be ready to consider House Bill 0343 by Representative Capley. Got a motion and a second?
Thank you, Chairman. Afternoon, committee. I think this is my first bill that's going to go through commerce. So exciting times. Mr. Chairman, what we're doing here is we're seeking to place protections against Chinese and other counterfeit lighters. We're going to prohibit the sale of lighters that do not comply with the American Society of Testing Materials and Standards. I have some statistics and other different things. We're not going to change anything regarding novelty lighter laws. We're not going to go after distributors. We're not going to go after anybody storing these lighters. We just simply moving forward want to make some corrections and keep Tennessee safe. That's all it does.
Thank you, sir. Any discussion on the bill? Mr. Clerk, we're ready to vote. Will you open up the voting?
Mr. Chairman, you have 5 ayes.
Thank you, Mr. Clerk. The ayes have it. House Bill 0343 will be going to full commerce.
Thank y'all. Have a good afternoon.
Thank you, sir. Well, we've got more than a presentation right now. We've got a wealth of knowledge that's coming our way, and I want to introduce our commissioner, Mr. Greg Gonzalez. Commissioner Greg Gonzalez is the 18th Commissioner of the Tennessee Department of Financial Institutions, who began serving in this role in 2005 and was reappointed by Governor Bill Lee. He has served in the department since 1986, and in this position, the Commissioner serves as Chief Regulatory of all the state chartered, depository, and licensed non-depository financial institutions. Additionally, he has served as Assistant Commissioner and General Counsel for the department. Mr. Gonzalez, it's a pleasure to have you today on this snowy day. The floor is yours.
Well, thank you, Mr. Chairman, members of the committee. Always good to be with you all. And I just want to take just a few minutes to talk about some observations I have and about the regulatory environment that we find ourselves in today. So you all know our primary goal is a safe and sound banking system that can support economic development. That's the basic premise of what we're trying to do. So to find that balance, we try to tailor regulation to the merits of each institution, avoid one size fits all, because one size fits all regulation really amounts to lazy regulation at the end of the day, if that's all that we do. As a reminder, we're regulating state banks, credit unions, trust companies, thousands of non-deposit companies. And I'd like to give you just a quick view as to how we go about regulation. What we see from the environment today, and really what we're also seeing as a result of the Trump administration transition. As you well know, we work with a number of federal regulatory agencies, and we partner with those agencies to meet our mutual responsibilities to supervise banks and credit unions. Federal agencies also have a big impact on the operations of thousands of non-deposit companies. We have a good working relationship with our federal partners. We've strived to do that so that we can create regulatory clarity for the industry. You know, if we can't create regulatory clarity, then it's hard for institutions to meet our expectations. So we've got to do that. And for our dual banking system to work, there's a healthy tension, I would say, between in the state-federal regulatory relationship. You know, the federal government charters and supervises national banks. Tennessee, through our department, charters state banks. We supervise those banks with the FDIC or the Federal Reserve. There's also a dual system for credit unions as well. We work with the National Credit Union Administration, which is the federal regulator. And I do think this state-federal regulatory relationship works well when state regulators have roughly an equal partnership with federal agencies, when we have a real seat at the table. However, in recent years, I would say that state regulators have not always had a real seat at the bank regulatory table, meaning that at times it's difficult for us to achieve that regulatory balance mission that I just mentioned. Today, though, because of what's happening in Washington, I've got more hope that we can reach that balance. I think to some degree what's happening in Washington is a reconsideration of the federal regulatory approach and philosophy, maybe even the structure of the federal regulatory system. That might mean a reordering of federal regulatory priorities to focus hopefully on what fundamentally supports safe and sound operations while being mindful of economic development. And I've had staff come to me from time to time saying, okay, we've got new federal guidance on this issue or that issue. Is that going to cause us to have to change our priorities, change the way we do things, maybe even add more staff? But I've assured our folks that our focus has got to remain on our core mission. We can't get distracted by everything that comes out of Washington. That would amount to unfunded mandates if we were trying to absorb everything that comes out of DC, especially when state regulators may not necessarily be at the regulatory table when some of this guidance is being developed. Otherwise, I wouldn't be able to tell you that we can function today with less positions than we had in 2010, but that's actually what we're doing. I think fundamentally for us, it comes down to this. State law calls on us to provide a safe and sound banking system, and we're dedicated to do that with this approach. We believe in limited government, meaning the least amount of regulation to get the job done is always going to be best. Just because a little bit of government is good doesn't mean that a whole lot more of government is even better. It doesn't work that way. The law of diminishing returns, I think, applies here as well. So we're going to do everything that's necessary to meet safety and soundness and have that in the operations of financial institutions. But there really comes a point that adding more regulation, in my opinion, negatively impacts the health of the banking industry, doesn't improve it. Now, I'm all for government agencies working to get better understand industry activities. We do that. In fact, all agencies should do that, find ways to better partner with the industry. I think government regulators should try to do more to actively help institutions actually serve citizens rather than putting institutions in fear of trying to serve citizens. There is an appropriate balance that can be struck here. Unfortunately, at times when issues happen with a few institutions outside of Tennessee, the typical federal response is to pile on more regulation on the rest of the industry. Here's one example of an issue that I think is important in the regulatory environment today, and that's innovation. It's being discussed in Washington and throughout the country. Crypto, AI, other innovative activity, front and center of that debate. You know, we support banks and others in being able to innovate. It just needs to be done prudently. And I've told various bank boards, we're open to any ideas. You know, let's work together. Let's start conversations early in the process. If we're not open to innovation in the banking system, then I'm afraid our community banking system is just not going to be competitive at the end of the day. And here's some concerning numbers that I'll give you. Since 1992, we've gone from 207 Tennessee state banks to 104 today. Just 10 years ago, we had 150. If you further reduce the 104 number by the number of federally chartered banks that have converted their charter to a Tennessee state bank charter, then the number of Tennessee banks would be less than 90. That is a huge drop, and I think consolidation may continue. Some Tennessee communities have lost their local bank and a local board making local decisions about their economy. Economic freedom is supported by community banking when a local board has the ability to make its own decisions as to how to deploy local citizen deposits. The trending of losing community banks needs to be reversed. And I've had some good conversations with Congressman Rose and others on a particular idea. As you may know, we engage in alternating exams with our federal banking partners, generally meaning for state banks under $3 billion in assets that are well rated. We'll take turns with our federal partners in performing exams and then sharing that exam with the other agency. Because efficiency is such a key goal for the Trump administration, and it has been for Tennessee government for a long time as well. I've suggested the idea of allowing our department, allowing state regulators to handle all the exams of the smallest, well-rated, non-complex banks, and then we'll share that exam back with our federal partners. We would continue that approach as long as the bank remained well-rated, did not engage in novel activities, and remained under a certain asset size. You know, this suggestion doesn't come from a position of criticizing our federal partners, but rather as an efficiency measure to support the most efficient use of limited regulatory resources and to support more effective and timely regulatory processes. Besides the exam process, we're also looking at how we can make our application process more effective. When you put those two efforts together, exams and applications, then maybe we could have an impact on forming new state banks and then hopefully help them and help their communities prosper. Here's another alarming statistic. Before the Great Recession, for a while, we were averaging about 5 new Tennessee state banks formed on an annual basis. Every year on that average, about 5. We've not had a new state bank formed in Tennessee since 2018. We're lucky to have 5 new banks formed every decade, not every year. We've only had 2 new state banks formed in Tennessee over the last 15 years. So to sum up my comments on the regulatory environment and what we expect and maybe hope for from the Trump transition effort is that these trends have been challenging for community banking over the last 30 years, and we're hoping for a more balanced regulatory environment in this country in support of community-based institutions. Every time new bank regulation is promulgated or new laws are passed, there's a chance that it adds more burden than it adds to supporting a functioning banking system. In that regard, I did want to point out that over the last 8 years or so, we've been working diligently in the department on reducing our rules on financial institutions. Specifically, we've repealed 3 entire rule chapters. The repeal of 4 additional rule chapters is currently in process with the administration. In addition, we have 2 other rule chapters that have partially been repealed and amended. So I think we've made some good progress on reducing unnecessary regulation. And with that, I'm happy to take any questions that you might have.
Does any of the committee have any questions for the commissioner? Representative Hemmer.
Thank you, Mr. Chair. Thank you for the presentation. I was struck by your stat about it. Basically, the charters have decreased by about half. What are the reasons behind that? Is that closing and a consolidation? Do you have any kind of like side data that can explain where they went?
Yeah, there's a lot of reasons for this. And, you know, to get a full understanding, you'd probably have to talk to each institution. But I think in part, it's regulatory burden, it's cost, particularly for smaller institutions that may not have the asset size to distribute that cost. There's a lot of reasons here. I do think the compliance cost is one of them, and there's been studies done on that. One of the things that we're trying to do, particularly with that idea that I've had some conversations with Congressman Rose about, and he's been a champion for that in House Financial Services, is if we're able to take care and handle the examinations of the smallest institutions that are well rated, then maybe we can reduce any burden that may come from going back and forth between state and federal examiners. So that's one possibility. There's other things that I think that can be done. For instance, I think there ought to be a different tier of regulation for our smallest community banks. There's no reason to have certain types of regulation for all institutions. We ought to calibrate it to the risk profile of these institutions. And we have a number of institutions that are very small, but they're operating well. We could tier regulation in a much better way than what we're doing in this country, I think.
Follow. Chairman Vaughn.
Thanks for being here, Commissioner. Appreciate it. And to my colleague from Davidson County, the Commissioner hit the nail on the head. I'm a recovered community bank board member that we divested ourselves of the bank, and it was really unfortunate because the cost of compliance is what gets you. When you're a small bank in a small town and you have to prepare for your state regulators examination and then your federal regulators examination, and these are people who, in other words, have to be trained in these areas. So you have to keep a back of house personnel just to run these internal exams. your portion in it, that's not money spent with loan officers or somebody else out trying to generate loan income. And typically, particularly in our rural areas, there's a deposit loan imbalance because the counties are getting older. People are passing away, and there's so sometimes you're overloaded with deposits, but then when somebody passes away in the community, the children don't live there anymore, and those assets are distributed to other places, and so then their value goes down, and it's unfortunate because the commissioner touched on it, and that is that the local economic engine for a lot of those places leaves. And that's one of the things that I think is critical to us and we've seen a lot of bills that have come through here that are trying to standardize loan practices of our community banks and somewhat take away the power and authority of loan committees that have the local knowledge, because somebody may not have looked the best on paper, but the folks that are in that loan committee know that he's an honest, hardworking person, or she's an honest, hardworking person who's been down on her luck for the last 10 years, either due to health problems or been caring for elderly parents or doing whatever, and they're willing to take a risk on that. Whereas a bank that has a loan committee that's not in that community doesn't have those same attributes. And I know that we've had colleagues in the past that are particularly with regards to they see that the standardization of loan documents and loan awards as being part of a challenge to the whole ESG impact of trying to make things less personal. And I don't think that serves our citizens well, because we do need to have these decisions made inside of a boardroom of people who know people. And I think that's critical that this committee continues to stay on top of that. We don't need, the others' issues or things to be dealt with in their own time, and they don't necessarily have to be in opposition to those positions. Don't have to be in opposition to each other. But that's one of the things that I try to defend, is that somebody looking out for the shareholders as well as the customers and as well as the communities. Those are the people that I want making decisions on how a bank operates. And we leave that into human hands as opposed to being standardized practices for all institutions across the board. I tend to feel very strongly about that. And Commissioner, if you could tell us about the Wild West. Tell us about what your department is doing to, and I know part of it resides in commerce and insurance, but I want to know about this interweb money. I want you to talk to me about some crypto and what we're doing to take advantage of the opportunities and mitigate the risk that folks fall into. But I want to hear about some of this money you can't touch. Help us out on knowing, how is your department monitoring, and where do you see what that role could be when it comes to cryptocurrency?
Mm-hmm. Well, the first thing I'd say is I echo everything that you said. It was well said with respect to maybe the decline in the number of community banks. You hit it on the head. So thank you for your comments. We're very open to innovation for our community banks and credit unions. So on the depository side, 3 or 4 years ago, we did have conversations, a few, not many, with a few banks and credit unions that were asking some questions about crypto and maybe how they would consider doing some things, but nothing ever materialized. So we really don't have any experience there. On the non-deposit side, we do regulate money transmitters that can exchange crypto for crypto or crypto for fiat. We don't regulate crypto. What we do, though, for those institutions that are engaged in crypto, we try to understand the impact of that activity on the financial condition of those companies. And so there are a few companies that do that. So that's the extent. So we don't supervise crypto, but we do try to understand the impact of those exchange companies with respect to the financial condition.
Well, thank you for that. That's the interface between banking institutions and that asset class, I think, is going to continue to grow. I look forward to watching how we perform your role when it comes to soundness and security versus how do we innovate, such as you touched on earlier, and realize that different asset classes are out there forming. I want to thank you for being a good friend to every member of this committee, and I would encourage my fellow members, and Representative Lynn knows this because she's served on this subcommittee for a while. If you have anything you need to know, you can pick up the phone and call Commissioner Gonzalez, and he will give you what I like about it is he will give you the commissioner answer, and then he will give you Greg's take on it, to where it's very helpful for us as policymakers to have a resource such as you that we can rely on for good conversation and thought-provoking conversation with regards to where we see our financial institutions moving on from here. But anyway, thanks for being here. I always look forward to what you have to tell us and what you have to share with us.
Thank you, Chairman.
Thank you, Chairman Vaughn, and very insightful there, what you said there. And along those lines, because I do serve on the small bank board, the numbers that you give, and no doubt about it, that is what's happening with a lot of these banks. But just to put in perspective some of these numbers, the acquisitions and mergers, how many of these banks that we've lost in the last 10 years have been because of acquisitions or mergers?
That's basically it.
Yeah.
We've only had, just a handful of closures. So it's all been consolidation otherwise. And, we need to reverse it. And I think one of the ways to do it is to see if we can work with Washington on creating better processes and an environment to create new banks. We need to hang on to what we've got, and then we need to create new institutions as well. And that's how we can really support rural economies, if we can do some things to make it attractive to do that once again. But we need some things to change, I think, in Washington to be able to do that.
Yes, sir. Any more questions for the commissioner? Commissioner, we appreciate you coming on a snowy day and filling us full of knowledge, and hope you have a great week.
Thank you.
Yes, sir.
Thanks, everybody.
We'll go back into session. All we need now is a motion to adjourn. Committee adjourned.